It's almost 2023, which can mean a lot of things. But to Brian Sozzi, it means earnings season is less than a month away. Start your countdowns, folks. Sozzi, your take today, you're looking at some of the stocks people love to hate.
Yeah, for normal people, they're looking for time with their families. I'm already looking to 3 months from now. We're in the smack in the middle of earnings season. No surprise there. All right, so let's start off with this. There's a lot of optimism coming into this earnings season that we will get very, very soon. Really, the starts in the second week of January. And you can see that chart on the screen right now. You can see that earnings optimism is starting to fade and fade pretty aggressively, I think, as a result of fears about a recession. Interestingly, according to FactSet data, 55.3% of stocks in the S&P 500 are rated buy ratings. Only 6% or so are rated sell ratings. So the street is very I would say optimistic on stocks going into this earnings season. Next up here, you can see where a lot of the optimism lies by sector. Analysts are the most optimistic on energy at about 63%. They are the most pessimistic on consumer staples, which is interesting because companies like Campbell Soup have recently reported some very good earnings as a result of pricing power. So maybe an opportunity in those companies that nobody is sniffing out here. Next here, we're looking at some of the companies that analysts have the most buys and sell ratings on here. Let's throw them up on the screen. Some of the most popular stocks there you can see on the screen. The most popular stock is a smaller company called Bio-Rad. You have Jacobs up there as well. And then further down the list on these top buy-rated stocks is a company that you know and I know well, pretty well, Brad, that is ServiceNow, run by Bill McDermott from the show. And then another one, Alaska Airlines, also viewed as a very good pick here. A couple stocks that analysts do not like here or have sell ratings on these companies. Let's run through this. T. Rowe Price. We have Con Ed. Clorox company, we've been very critical here on Yahoo Finance after pretty much, I would say, 5 quarters in a row of just very bad results. James Smucker, surprised to see them on this list here, but certainly falls with the street being a little more cautious on consumer staples names going into next year. And then, lastly, just looking at some of the other aspects to this call by FactSet, it's just a lot of analysts, I think, are just entering the season very, very optimistic. Maybe they should fine-tune their estimates a bit.
The big question, too, is, and I would love to get your take first, and then we can talk a little bit more about it.
Take is this. Buy holds and sell ratings, they may not mean much. There we go. There we go. A buy-rated stock doesn't mean buy, and a sell-rated stock doesn't mean sell. You could very easily, we could be having this conversation from 3 months from now, Brad, and a company that is rated sell or by a majority of analysts on the street, they have a comeback quarter and the stock goes up, and vice versa for buy-rated stocks.
And that's actually what I wanted to get at, was because could this finally be the earnings season where if we have enough talk going into it about the repricing of some of the earnings estimates and then the actuality of that being reported by the companies, could we finally see a season where investors can look to the results and then look out into the future and say, you know what, a recession now at this point might be priced in to these shares?
I see where you're going. I hear that point. No, it's
tough to call.
No, you're on the mark, and it is tough to call, Brad, because as we just mentioned, only 6% of the companies in the S&P 500 are rated sell. Mm-hmm. So I still think this is an analyst community. At least those companies attract these S&P 500 companies and put out their models on them. They're always hopeful. They're always looking for great things. And look at what we've seen in tech. These stocks have been absolutely slaughtered this year, and yet most analysts have stable buy ratings on big cap tech names.
Absolutely. All right, well, we'll keep a close eye on those companies going into the start of next year and the next earnings season.